Hello guys and welcome to Daily Market Movements. Welcome to another episode of Commodity Watch. In today's video, as always, we're going to be analysing the gold and the crude oil markets. Just before we start today's video, just want to say a massive apology for not posting any videos over the past week or so. That's because I had my first holiday in over 12 months with the family. We flew to New York and we had a lovely week, but now it's back to work as per usual. So looking at the gold markets, let's start off here. Last week we did have a fantastic week here for the gold bulls. In fact, we actually turned this around. We were previously testing that 0.23% Fibonacci level. In fact, we did go as low as 1753, and it looked like gold was going to complete its breakdown towards 1722. And it was in our last video where I said if we can break below this fib level, that's where we will then go and target these areas here where we found support down at 1722. But we actually reversed those losses and we managed to finish the day in green. That was off the back of Jerome Powell's comments from the Fed Minutes conference, and it actually sent gold skyrocketing all the way up to 1833. I still do not like gold. Now, many people are saying, well, look, Max, it's turned around. It's done exactly what you said it wouldn't. That's not the case. In fact, we've actually formed a very ugly looking candlestick here last Friday. And in fact, that has increased my belief here that gold markets will return to that 0.23% fib level and we will see a breakdown. This is what you call a shooting star. It couldn't be more of a perfect looking candlestick than that. And that to me indicates that we will see some downward pressure going into the start of this week. So the market's open in roughly an hour or two's time. Very interesting to see what will happen here for the gold markets. It may take a couple of days to play out, but I do anticipate a return down towards 1770. So that's what I'm looking for first of all this week. And then eventually that breakdown towards 1722. And if we can get past 1722, that's where I think we've eventually hit our target area, which is around 1700 down to 1680. Now, that's just for downside. Personally, my personal belief is that I do see us breaking down lower here for the gold markets, especially with its tapering process and interest rates expecting to be hiked. I think that, the good days are over for the gold markets. I think that we will see a return back down towards 1500, 1400, 1300 in the next 12 to 18 months time. But let me cover the upside, because you may be watching this video and you may be thinking, well, I personally think gold is going to go up towards 2000 or 2500, and that's absolutely fine. I welcome you to have, this belief that gold could go higher. At the end of the day, I'm just a trader and I've come onto YouTube and I'm sharing my own opinion with you and as to why I personally believe it will go down. And most of it's technical and fundamental analysis. I don't know whether you guys are, you have a more of a technical or a fundamental approach, but let's just look from a technical perspective as to why, gold could potentially go higher. Well, if we break out of this downtrend that we've been trading in since August 2020, that would be very, incredibly encouraging. And yes, it did previously happen, but that was a false breakout. But if we did break out here, if it sent us above that 0.38% fib level, that could be what sent us back towards 1877. If we broke above 1877, then yes, I would have to step aside and say, well, guys, this is actually looking incredibly bullish now. And then we could see a return up towards 2000. Now, that's the only technical reasons as to how I personally believe gold could turn bullish. Of course, most important of all as well, we would have to see that bullish crossover. We got that death cross there on the 8th of December 2021 with a 50-day EMA pierce below the 200. So that typically says medium to longer term we will be trading lower. But sometimes we do get a load of fake death crosses, just like we had here back in the beginning of August 2021. Nothing really come from that. In fact, we did get a move down towards 1683. But you could argue that, because the moving averages can be a lagged indicator that we already saw that price movement, and then if you would have sold down here, then you would have probably lost a significant amount of money. So sometimes they don't really mean much, the death crosses and the bullish crossovers, but you can't ignore it. Also, from a fundamental perspective, you could wind back the charts to the 2008 and 2009 financial crisis. Gold didn't actually, in fact, hit its all-time high until 2011, which, of course, was 2 to 3 years after the financial crisis actually occurred. If that was to be a similar case here with COVID, well, then it wouldn't be until next year, 2022, maybe going into the beginning of 2023, that gold would hit its all-time peak high. So, that's one fundamental that the gold bulls have got going for themselves. But personally, as I just mentioned at the start of this video, my personal bias for gold markets is bearish, and I do see us this week returning down towards 1770. And what I'm really looking for for is for us to take out these lows and send us down towards 1722. And if we can break below 1722, that takes us down towards 1700. We do have a sell trade open over on the streaming service where I speak about gold in more depth. If you guys would like to enter that trade and join our private Telegram signal chat, then please go ahead to the website. I'm going to leave a small clip in a few moments time explaining how you can join that chat. But on that streaming service, I explain our entry and exit strategy in much more depth. But I just thought I'd come on here just to have a recap with regards to the gold markets, just to let you all know what my thought process is. Let's move over to the crude oil markets to finish this video off. Crude oil, very choppy markets. The yo-yo markets have returned. I think this is slightly because the crude oil markets have been correlated with the stock market as of recent. Currently trading at $70.35 under the new fear of its variant, Omicron. It spreads 90 times more than the Delta variant in open airspaces. But the good news is that it's not as deadly as Delta. Crude oil has been very volatile over the past couple of days because, we're getting given all this news and we're trying to interpret it, whether it's positive or negative. No one really knows at this moment in time. And I still personally believe that there's a lot more negative news to come. The US, for example, this new variant hasn't really taken its ground there. In the UK, for example, there's cases left, right and centre. It's Christmas time. My family, for example, have all had to cancel Christmas plans because, so many of us have all been tested positive. Even my sister's currently got it. She's quarantining in her bedroom. So it really is bad here in the UK. You see it in London, for example, which is kind of the epicenter of COVID here in England. It is a nightmare. No one really wants to go out anymore. And of course, this is going to damage the demand for crude oil. But again, this new variant hasn't really taken hold yet in the US, and it will. Of course it will. Many other countries are starting to report cases, and of course it's going to spark fear into people. So crude oil, I am bullish, but I'm very cautiously bullish because, once this variant takes hold in the likes of the United States, I was in New York last week, and at this moment in time, it's not like it is here in the UK. People are still going out. They're still okay to take the subway. They're still going out to restaurants, not really wearing masks. Where in the UK, there's a lot of fear here at this moment in time, and of course, this will go to the US, and it could really weaken the demand for crude oil. So I'm going to, remain bullish from a cautious perspective here for the crude oil markets. But if we break below that 200-day EMA, I may have to close this trade out. But yeah, we currently do hold a buy position here for our private signal group chat. And again, I have posted a video explaining our entry and exit plan with more in-depth details. But as long as we can hold this 200-day EMA, I think eventually it sends us up towards a 50-day EMA at $74.37. But of course, a lot could happen. A lot could happen between now and then. So I prefer to analyze the crude oil markets from a day-to-day perspective, especially with how volatile the news can be. But if we broke below this 200-day EMA, that could send us down towards $67. If we broke that, then that could send us down towards our swing lows, down towards $61. So I do fully anticipate the volatility to excel here with regards to the stock market and the crude oil markets, and of course the gold markets. So it's going to be quite a difficult time period to be trading over the next couple of months. So if you are a retail trader, please do trade very cautiously, and it's all about risk management. So that's that's why one of the main reasons why I like to come onto YouTube and post these daily videos is to help the retail traders not to lose money, because for years now, it's a small fish. The guys like you and I who come on, we open a trading account and we get hurt. So that's my goal here, is to come onto YouTube and help you out as much as possible. And my best advice to you all for the next month or two is to please trade very cautiously with a very good risk management strategy. Otherwise you will blow your accounts. It's as simple as that. But I'm going to wrap that video up here for today, guys. I'm going to leave it a small clip in a few seconds time explaining how you can join our streaming service and private signal group chat. And that is going to wrap it up for today's video. But just before I let you leave, I just want to quickly show you our brand new streaming service. We've recently launched this website that you can see in front of you. This is where we provide in-depth analysis videos as well as trading signals via our Telegram group chat. How it works is really simple. We have two subscription plans. First one is a monthly fee of $19.99, and the second plan is only $209.99 for a year's subscription. Once subscribed, you'll then have access to all of our in-depth analysis analysis videos, as well as access to our private Telegram group chat. We cover various markets such as commodities, US stocks, indices, and cryptocurrencies. We also have a video category where we provide educational content so that you can improve your trading skills. If this sounds appealing to you, then you can find our website link in the description of this YouTube video at dailymarketmovements.com. If not, then I would just like to take this time to say thank you for watching today's YouTube video. Please give my channel a subscribe and give this video a thumbs up. Thank you very much, and I hope to see you again soon.